Hello everyone. Welcome to Level Up series by IndusInd Bank. In this exciting new knowledge series, we will be hosting fireside chat sessions on pertinent industry agnostic topics. We will be joined by industry leaders, successful entrepreneurs, and IndusInd Bank's own leadership. We aim to bring you first-hand knowledge and insights directly from the forefront of the market. For our inaugural episode today, in celebration of the International MSME Day, let's turn the spotlight on the vibrant MSME sector of India and talk about a topic that is currently on everybody's mind, the SME IPOs. One of the most crucial challenges for SMEs is securing funds. While debt financing is common, there is a limit up to how much debt can be leveraged. This makes equity raising essential for growth. Today, we will explore the SME IPO route, a rapidly gaining method for raising equity. In India, close to 1,000 MSMEs have successfully raised more than 15,000 crores through IPOs since 2012. Furthermore, the average issue size has increased from 10 crores in 2022 to a current range of 25 to 35 crores, reflecting the growing confidence and scale of SMEs in the market. Hence, this topic is more relevant now than ever. At IndusInd Bank, we continue to remain focused on growth of the MSME portfolio and are continuously introducing new products, policies, and servicing capabilities to accelerate growth by using latest technology and providing best-in-class experience to our customers. Joining me for discussions today are Mr. Harsh Badkar, Managing Director of Kemtech Industrial Valves Limited, who have successfully gone through the SME IPO journey, and Mr. Amol Shirsagar, Vice President Business Development at Arihan Capital, who are leading merchant bankers providing complete services for SME entities in their capital raise journey. So Amol, please tell us about your firm and how does it assist SMEs in preparing for and executing the IPO?
Yeah, so thank you, Sandeep. So I represent here Arihan Capital Markets Limited. So we are a 30-year-old company in the financial services arena, and I mean we also have grown from a small beginning. So to that extent, I think we were also an SME in that scenario. And incidentally, so we date back to 1992. We had an IPO in 1995, which can be kind of a similar SME IPO of that time, about 3 crores. And from there, I think we have grown today to a full services firm. We have investment centers and broking offices across India, and besides broking we do merchant banking, research, equity, forex, commodity broking. And I mean the entire experience of being an SME and growing, and having the SME and the investor mindset, economic cycles, all these experience combined, we are able to understand the pulse of the SMEs, what is their pain points, how do we resolve them in a much better way, and that's how we are able to basically we act as the first guide and advisor to the SME whoever wants to raise funds. And we have refused many people to not to go for SME because we found they were not at that level to really understand the product and take it to the market. So that's what we as a company is the first step, is to guide them as to where they are and what is this product all about. The education is the first step that we do, and then because of our capability in financial market, due diligence, all those areas and legality, everything, we are able to do a proper job for them. So the theme is that we understand the heart of an SME, and that's why we are able to give them the solutions. We are ourselves listed on BSE and NSE. So from a small beginning, what story we give to people, so we have lived that story. So that's about it. So I've been privileged to be part of this. Like the company is about 30 years old, the division is about half the age, and I have been part of the division since inception. So that's the
good. So right from advisory to various steps which are required in terms of capital raising, I think each and every step you are there to take care of the
key is the structuring, which is I think the execution comes later, that the structuring, positioning, the timing, everything we are able to guide them. And we have done that, I mean in our case studies where a company was there which was fragmented businesses, like most of the people do, a proprietorship, a partnership, a private limited hai. So when they came to us, we realized the potential is huge, but then it will not make an impact in the market. So we spent about more than 1 year to consolidate their business, giving them services of consolidation, stamp duty consultancy, wo time VAT tha. So all those things we did them. then it became a consolidated entity, and we went for an IPO after about 1.5 years, and today it is doing great. I mean, the returns are multifold. The company has grown both in terms of size and profitability, and the investor interest also. So we could see that how the investors would probably perceive this if it is presented in this manner. So that's the value addition that we try to bring with each client that we work with.
Good. So we have Harsh also with us. So Harsh, please tell us about your company and how has been your journey so far actually.
Yeah, firstly, Sandeep, thanks for having us here. So basically, our company Kemtech Industrial Valves Limited was founded in 1997. So we've been in this industry for about 27 years now. We manufacture industrial valves for across the steel sector, power sector, oil and gas, fertilizer, a couple of sectors we do. So till about 2009-10, we were a small micro kind of a manufacturer where we were supplying to certain OEMs and some small industrial units in and around Maharashtra. But then 2012-13, we decided that let's expand this aggressively because the economy was opening up quite a bit. And then we undertook a 25 crore capex actually at the time. We set up a world-class manufacturing unit at Bada. And today, I'm glad to share with you that we are supplying to all blue chip companies like Tata Steel, Jindal, JSW, ArcelorMittal, BHL, NTPC across the table. And we as a company, we are basically not just a product manufacturer, we are more of a solution oriented provider actually, which is why what is happening that even the large companies that we have, the large corporates, we built a good credential wherein we are one of the very few vendors for large critical diameter valves that we are making for them. Even today, all of our customers contact us for their special need requirements. So we built that kind of a niche. And
so from a product, you have become a solution company actually. Maybe originally you started as a product company, but over a period of years, you have created a solution company out of that.
We have become a solution provider. We have become a solution provider now. That's kind of the trajectory has been. And we've been with IndusInd Bank for about almost 12 years now. And we got into IndusInd Bank during the time that we were undertaking this capex actually.
Okay.
Yeah. And we have very good comfort with the bank. The bank has very good comfort with us given our track record. So that's
it is a good mutually beneficial partnership.
Absolutely. We are thankful.
But what was the turning point in your business which made you to consider for an IPO? So what were the factors which governed you into an IPO decision?
Right. So Sandeep, so like we were sharing with you, the capex that we undertook in 2012, it was a 25 crore capex. We were also jumping from a small state to a much larger investment. So what we have seen that being an SME, it is very important to be financially prudent in whatever you do.
Of course.
So we decided that, okay, there were certain internal accruals that we would use. We went to IndusInd Bank for some of the debt. And the rest of the balance of the equity, we explored the IPO route. Because one thing in SMEs, what we need to realize that basically the capex cycle and the business cycle may not always match. So if you're going to keep everything using debt, it may not be the best decision, and you need to keep some cushion for the times.
Correct.
Whenever it may happen, situations may happen where the tide may not work out as per your calculations. Also for SMEs particularly, we've seen that working capital has always been a big challenge for most of the SMEs.
Of course.
So that was also a reason that once you are listed, post your listing, your financials become very strong. It also helps you to manage your working capital better. So that was the decision. That was the time that we decided that we should explore this route actually.
But was it not a very difficult decision actually coming from a traditional family background companies? I think a lot of times we have seen that there are challenges in terms of dilution of the ownership control. So whether we want to dilute the ownership control, whether it will make sense for us, there will be outside investors who will come in terms of management of the company. Were those factors weighing on your mind?
So that definitely we had that discussion internally in our family. And I think in retrospect, we would say that if we had to do this IPO again today, we would have probably gone public 1 year prior to when we actually did. Because if we had done that, we would be 3 years ahead from what we are today. So these questions are definitely valid, that loss of control, etc. But what I realize is ultimately, and I'll advise the other SMEs also, that it's a time to think that it is much more valuable to own 100%. It is much more valuable to own 50% of a 100 crore company than to own 100% of a 50 lakh company. The day you start thinking of that mindset, your outlook will change. And regarding the investors coming on board, ultimately what we have realized, because we've been listed for about 10 years now, the investors will always reward you. If you are true to your vision, if you are working with integrity, if you're keeping your corporate governance right, if you're performing, investors will reward you again and again. They are not coming to run your company. You are the captain of the ship. You have to run the company because you know the business. They are betting on you basically eventually. So I think investors will always reward you, and I think this is not much of a concern, frankly speaking, that the investors will come take control. As if you are honest and you are running your business with integrity, I don't think that there's anything to worry about.
So Harsh, I have to ask you this question also. Since you have been dealing with almost all the top corporates, etc., Was listing an added advantage? Basically, being an unlisted company, I think in terms of governance, compliances, maybe it was a bit different actually. But having been listed, so does it give you an additional leverage to for the business with these top corporates?
So absolutely, Sandeep, that is one of the biggest advantages of getting listed, because today when we are going to any of our existing customers or even a new customer, for example, and we tell them that we are a BSE listed 250 crore market cap company, we automatically, the confidence that it arises in the people is unmatched. Because like we were sharing, we manufacture critical industrial valves. So it may be a small percentage of the overall capex. Let's say Jindal Steel is setting up a 50,000 crore plant. So maybe only 1 or 2% of the capex may be valves, but it's a critical component. So they require the confidence in that whether the vendor will be able to deliver or not. When we are going to them as a listed company, we get that confidence. The customers get the confidence. So that is definitely a very big advantage that we have derived after listing. Absolutely.
And one more related question actually, does it also help you to attract talent? Because your field is a very technical field actually. So you will always have a requirement for good people all along. So do you feel maybe a listing, it helps you to attract talent to share, I think maybe the growth in terms of whether ESOPs, etc. Does it help you to get more talent?
Absolutely, sir. So a company is nothing without the team. The direct.
Because that is one of the challenges we see across in the SME teams. Getting talent into the SME companies are a bit tough.
Absolutely. Because many times what happens when the company is small, you don't have the wherewithal or the financial bandwidth to get top talent to pay the kind of packages which they would expect. What happens is now we've seen also some of the people who have been with us from inception, the sense of pride and the sense of security, more importantly, that they feel when they're working in a listed company is something else. And you can have, like you said, the ESOP pool. There are so many times you can go for a buyback. So when you're creating wealth for your employees also, it ultimately shows in their performance, and that ultimately takes the company stronger, because ultimately the management cannot do everything on their own. So I think one of the biggest advantages is also to be able to attract new talent, top talent, and to retain your existing talent also. Definitely.
So Amol, my next question is to you. Since you've been there into the capital market for so long, what are the visible trends which you have seen into the SME IPO market?
Yeah, so I think absolutely there has been tremendous change the way SME market has shaped up over the years. So 2012 is where it all started, and I think from there the number of companies that are coming, the kind of companies that are coming, the investor interest, the size of the IPO, the subscription levels, everything has really gone for a change. And I think you will appreciate he has been listed since I think 2014. So from that day and today, I think if given a choice, the quantum of money that he could raise at that point of time and versus today would have been very different. So what has happened? 2012 was an early start. There were skeptics around this. We had an OTC exchange, I think, at the back of the mind for most of the people, whether this will survive. So it started crawling at that point of time. But then as and when the liquidity increased, and the people started realizing the potential, and the SME statistics that you mentioned in the beginning was there always. It was that the SMEs were seen as a risky bet. So that slowly changed with the kind of companies that delivered, they performed, investor interest came, and today I think we have about 1,000 odd companies listed on SME IPO. The market cap is growing. There is a depth of investor interest. Institutions have also started participating in last 1.5 years. So that is, I think, one of the major breakthrough for the SME IPO, where lot of serious and seasoned investors have started taking interest. There are companies from across the sectors, from manufacturing, from the new age drone technology, biotech, capital goods, engineering. Everybody is contributing to the GDP growth, and they are also getting a good reward from the SME IPO. So that has been there's been a sea change actually. I mean, the people who have observed, today is the best time, I think, if you are an SME and you are having a solid business with you and having a growth aspiration, I think it would be a very good opportunity to explore.
Some fundamental differences, if you can, between the SME IPO and maybe the mainframe IPO. What are the fundamental differences that you see between these two?
So I think the regulators, the government realize that these SMEs need that support. They may not be having that much, build business at this stage for a main board IPO. So they have reduced the eligibility requirement. There are certain disclosure requirements which are relaxed. For example, for a main board IPO, we need to have 15 crores average operating profit for 3 years. Whereas there is no such stringent requirement for SMEs. You just need some track record and some basic financial capabilities.
5 years track record and profitable in 2 out of 3 years.
Yeah. So very basic. So I think the kind of companies who should aspire for SME IPO should not be worrying about those eligibility criteria, because that's where you are already better off when you have crossed certain stage. There are reduced disclosure requirements. For example, instead of quarterly results, you are allowed to have a half yearly results. Instead of Ind AS, you can do with the normal. So there are certain relaxations which are granted. The difference is also in the structure. For example, in case of SME, one can apply with a capital of 1 lakh plus, whereas in case of main board, there is a 15,000 is the minimum application size an investor can apply. So this makes the space interesting on both the sides, where only seasoned people become participant. Then they drive the market, and there is an option to migrate for all SMEs to main board, fulfilling certain criteria. So the company is matured over a 2 to 3 years period. The investors have funded, they have seen the growth, and then it is available for the market at a large, including the retail investors. So very interestingly set up product. This SME IPO is there, but the fact is that this is something which is available for growth oriented businesses, and I think they should consider it as an option to raise capital on a long term sustainable basis.
Great. So Amul, just one related question to that. So I think one of the question which goes into every promoter's mind is, what is the right time to come for an IPO?
Yeah.
How would you address this question?
So right time is basically there are various ingredients to create that right time. So one is, I think, the industry size, which I think with the booming economy and the run towards the 5 trillion, I think most of the sectors are creating a good opportunity as far as market size is concerned. Second ingredient would be the capability of the management to capitalize those opportunities. Third is your structure, management structure, data management structure, and the business plan too. So when there is a business plan, there would be probably a capital gap. That's the time where you should actually decide that it is not that the market is booming or the SME IPOs are the flavor of the market. No, I have a business, I have a plan, and capital is the only inhibiting factor for me to achieve that. That's the time, because the market will give you money, but they are expecting returns. So it's a financial investor. He is not going to drive the business. So business has to be driven by you. In your driving, you see that if this engine is added to my growth story, I will benefit as a company. The investors will be benefiting with the fruits of that.
How important will be the external market conditions? So maybe I establish a requirement, I have a plan, I have a requirement for capital. So do I have to wait for a favorable capital market for me to raise the capital? So what is the thoughts around that?
Yes, so I think it is important consideration, because the markets run in cycles. It is a sentiment driven market, liquidity driven market. So while my business may be needing money today, but I need to be mindful and aware of the considerations of the market. So I can prepare myself, I can be ready, but the launch is most favorable when there is a proper market condition, there is a ample liquidity. The valuation, basically the one of the important factors would be what value I should raise the capital at. So when the market is buoyant and there is enough liquidity and investor interest, I would be able to get a more favorable response and a more valuable response in terms of valuation. So it is not a deterrent, but it is definitely an important factor where I can be, with the same exercise, I may be a better off doing that IPO in a proper market condition.
Thanks. So Harsh, coming back to you, so how did you prepare for an IPO process? What were the steps which went into preparation for an IPO process from the company's perspective?
So Sandeep, I think the biggest decision and the most important step is selecting the merchant banker. The right merchant banker is the first step that you do, and it's the most important decision basically, because the merchant banker is going to handhold you through the entire process. And as far as the process, so the legal due diligence, the business diligence, the prospectus drafting, all of that. So the merchant banker takes care of all of that. As a company, we have to be very clear that what is our vision, what is our plan, because we have to communicate that to the merchant banker. He's our partner in this. That is how he will draft it and he will share it with the investors, and the whole process will be done. The company needs to be very clear what is its vision. Keep that very clear. And the other important thing for the company to do is keep your compliances in place. Make sure that you're complying to all the laws, all the regulatory filings, everything is being done by you. That's the main thing from the company angle, basically. Rest everything is handled by the merchant banker, your consultants. So, but definitely this is our then merchant banker. We had a very good experience with him, and this is one of the main steps for as far as the company is concerned, I would say.
So I think during the capital raise steps, I think there is a lot of professionalism that you bring into the company in terms of compliances. I think it becomes more by way of a BAU rather than saying that it is only for this particular activity. So it strengthens the way in which you run your particular, more discipline is brought into your business.
Absolutely, absolutely. So like we are discussing about the SME. So what happens in generally in India as a trend, that all private limited companies are also being run as a proprietor style of functioning. The minutes books are not there, etc. So a lot of discipline comes in. Absolutely, because you need to have a full-time company secretary. Your reporting is happening on a quarterly basis, half yearly on SME and quarterly once you're on the main board. So all the compliances, ultimately the corporate governance, because ultimately the cost of these non-compliances is too high, and you cannot grow if you are not able, if you're not in compliance of all the various laws and the various the applicable regulations in place actually. So I would definitely say that yes, it is a very good benefit for the company and for the promoter also, that they all get compliant in this process.
What is the biggest challenge which you have come across? See, IPO process, again, I think it is a journey. And in terms of processes, of course, you mentioned about the processes. But I don't know, was there a difference in terms of the valuation, something which you had in mind and something which market was able to offer you? So was there a discussion, debate that was there on the valuation that was there, or any other major challenges that you faced into this journey?
So absolutely, Sandeep. So like Amol said, this is a very sentiment and very cyclical driven event which happens in any company's history. So I'll share with you. So 2014 when we got listed actually. So that at that time manufacturing was not the blue-eyed boy of the market. That time it was more of ITES services were more of the prevalent companies. Manufacturing was not so in it, and also being in a B2B industry, unlike a D2C industry, the eyeballs we don't get that many eyeballs. People in the industrial or capital goods sector, they know us, but outside of our industry, nobody knows us. Unlike, let's say, a consumer brand or somewhere where it is easy to get eyeballs. And at that time, social media was also not very prevalent at the time. So getting the message across to the investor, the marketing was a bit of a challenge, I would say. And other than that, this is pretty much the main challenge, I would say. Okay. And the valuation, definitely it matters on the valuation, because if somebody were to get an IPO today, even a B2B sector, even our company, if we were to get an IPO today, I think the valuations and the kind of investor interest which we could have got today would be much different.
So Amol, what will be your perspective? I think maybe you also handle so many SMEs, they come with varied challenges. So according to you, what are the biggest challenges and fears an SME has basically, and how do you guide them through that particular journey? Any examples which you can share with us?
Yeah, so I think the biggest thing is, see, SMEs, we have to understand that they start with a small and then they keep on growing with, I think the banks are the first partners they latch on to for, their funding needs. And so they are running the business to just, survive and grow to the next level. Planning an SME, so in this whole process, the data management, compliances, management structure, so it generally takes a little side, it's not a back seat, but it's a side seat definitely. HR, roles and responsibilities, so those management structures, see, eventually the SMEs have to grow, so they need structure. That structure is something which is not not very thought about from the promoter side because of the occupancy in other matters. So that is, I think, the biggest challenge, where the SMEs have to structure themselves in terms of data management, accounting, and the overall management roles and responsibility, which we guide as a conceptual process. The rest of the thing is the financial discipline, the commercial, the documentation, legalities. So all those things is part of the due diligence process. So there is a basically before you come and launch, there is kind of a pre-stage where you need to structure yourself, like we are coming here prepared. So we have to structure ourselves internally, externally, to present a better case, and where the valuation, everything will be driven. So people are more important, will be interested to have a strong tree standing with the branches rather than a single.
So that is what you would say. These are the factors which an investor will look while subscribing to an IPO.
Sure.
So in terms of how structured the company is, in terms of the data, governance, compliances. Correct. So these are the factors which they would normally look at while subscribing to the IPOs.
So that is visible from the way the company is. See, there is a management structure. So DRHP document actually is a very comprehensive document. It's a very liability document and a marketing. So it's a mix of both. So directors sign at the end of the document certifying that whatever is mentioned here is true. So it actually captures the history, the capital structure, the corporate governance structure, what is the management structure, strategy, everything is there. So the investors actually look into that, and these are the pointers they would be comfortable with, because as he said that they are betting on a money is being given, he has to drive. So who is the driver? What is the structure? Is he the alone person? Are there people around to take care? So these structures are very important. I mean, these are soft items, I mean, in terms of not the hard financial numbers, but they play a lot in terms of garnering subscription and the continuing journey. So management quality, as we proverbially say in the capital market, so that's very much required. Besides that, I think the professionals are there, company secretary, chartered accountants, advisors, who would take care of the other routine matters in terms of documentation, but the management has to have a clear drive and the vision. Yeah.
So Amol, I think once you are through with an IPO, so how do you ensure that the investor interest continues to be into those particular IPOs? So what are the factors which, as a merchant banker, maybe?
So I think I should thank you for asking this question. It's because this is not the end; it is the beginning. So I think most of the people, I see, one has to understand that why we are going for IPO is not to tide over this very immediate need of my capital plan or business need. I am taking a step into the market which gives me a perennial flow of equity as long as I am performing, as long as I am delivering, as long as I am communicating. So this is the last part which is very important in the post listing, that we need to communicate. While we came with an IPO, we communicated through DRHP, we communicated through investor presentation, roadshows. What after that? What are you doing? What is that next steps you are doing? Are you getting into some expansion? Are you adding new clients? Is there any fire in your factory? Everything. So the investors in outside, he wants transparency and quick communication, and quarterly calls, earnings, transcripts. So all those things. So there are many people who are on the sitting fence. They would also look into that. It's not only your own investor. There are a lot of other public people who are watching what is this company doing. So you will create a market for yourself by a proper communication, and we guide all our companies to have this shareholder communication program very much in place for post listing. There are agencies, specialized agencies, who do deal in this kind of activities, and we advise our companies to take services and keep this communication channel going, because even the large companies have to do that. So why not SMEs?
So Harsh, I think how did this IPO, so maybe once you raised the money basically, so how did it affect the company's growth plans over the next few years?
Correct. So like we discussed earlier, once you are listed, the kind of financial muscle and the kind of reputational muscle which you build in your company, because you're dealing with your customers, you're dealing with your vendors, you're dealing with outside stakeholders, bankers, for example. So you get a very big advantage over there actually. So your growth trajectory goes exponential from here. And like Amol said, that don't go public just for the sake of going public. When you have a plan and you see that capital is the inhibition to take it to the next level, that's when you decide to go public. So I think this is a very big, very good injection to take you on that fast trajectory actually. So definitely the growth has been exponential after we got listed actually.
Great. And so somewhere I think you migrated from the SME board to the main board basically. So can you tell us something about that transition journey and what made you migrate from the, because there will be, I think, more compliances that will be there. There will be more disclosures that is required to be made. So what prompted you for that change actually?
Correct. So basically, like we discussed earlier, what happens in the SME board is that the ticket size is slightly higher. We're looking at 1.5 lakh kind of a ticket size. And what happens with that, which is also a good decision from SEBI, that basically they're trying to restrict this to HNI investors rather than the retail investor, because the volatility can be a lot more in the SME stocks, and all the investors may not be able to take that kind of a risk. So, but ultimately what happens when you want to grow the company, you need more liquidity, you need more, you need your register to be deeper, you need more institutional interest, mutual fund interest. That happens more in the main boards, in our opinion. So we, in December 2017, we were on the SME board for about 3 years, after which we migrated to the main board. There are some eligibility criteria. After we meet the criteria, we have migrated to the main board.
But what about the controls and the additional disclosures? Is it something which an SME can manage?
It is. I think it is very easily manageable. I think so. So whether you go on an SME board or a main board, I think the only hitch, like you were asking the earlier challenges, I think one of the biggest challenges is that when you just get listed. So initially for the first few months, the transition period, there are a lot of compliances to be done. So you need to be ensured that you are sticking to that time to time. But as long as you have good team in place or good consultants in place, it is very well manageable. The big major difference is that on an SME board, we have twice a year financial reporting, and on the main boards, it is quarterly. There are some few more additional requirements are there, like NDS, you have to adopt NDS, but they are all forward looking and they are very easily manageable.
So Amol, what are the critical compliances which, so in the SME journey basically, which are the most important compliances which maybe some SMEs normally they miss it, and which takes them maybe a longer time to access the capital market. So, what are the key compliances which you will ask an SME to be?
Okay, so I think in terms of compliances, so there are critical compliances which are your business oriented, and there are these commercial compliances. For example, your tax laws. So your income tax, GST, VAT in the earlier regime. Then there is stamp duty, or your Factories Act, shops and establishments. So there are a lot of compliances which we are all aware. ROC, one of them. So I don't think most of the SMEs would not be complying with them. Maybe somewhere here and there they would have missed out on certain elements, but it can be regularized. So it's not something which should be really putting them off, in terms of thinking about an IPO. Yes, if there is a challenge which has happened in the past, there can be solutions around it. There are compounding. So a right advisor will be able to guide you through this, and they should not be worrying about that. But normally the compliances are of your business nature and the commercial nature, which are applicable to your business.
And I think this is a question maybe to both of you. So, how important do you think is the relationship between the SME and the merchant banker during this process?
So if you can think of it like a movie set, there's a Shah Rukh Khan. He's the actor, but the director Yash Raj, he's actually shooting the movie. He's selecting the songs. He's selecting the set. He's doing the marketing of the movie. So without Yash Raj, there is no Shah Rukh Khan actually. So basically, they both have complementary skills actually, and they both हाथ मिला के जो बात बढ़ती है वो वाली बात है actually. The company, this is a process which a company is totally new to, especially an SME enterprise. So the decision to appoint the right merchant banker is one of the most key decisions. It's a very important relationship, absolutely.
So I'll go back to the initial discussion where I mentioned the advisor, the education part. So that is very important. As you mentioned that they are trying to go for the first time. There are a lot of queries, questions, skepticism. So they have to be guided properly, told the right thing upfront in full transparency, that this is not totally risk free. This is where there are risks. This is a manageable risk. This is how we are going to tide over this. So once that comfort is built, then as you mentioned, it's a teamwork. There is an additional comfort required, because this journey is at least a 3-year long journey, because we have to migrate also after 3 years. So the trust and comfort with your advisor and the merchant banker, I think, is a very of utmost important. For us also, we want to
I think transparency and disclosures is something which is extremely
we
important.
We also want to take a company where we have a comfort of taking our investors' money. So it's like as he mentioned, it's an interest. So Shah Rukh has to trust Yash, and Yash has to trust Shah Rukh for the yeah.
So Harsh, maybe if I have to ask you, so if you had a choice actually, what different would you do actually if you have to raise the capital today instead of maybe 10 years back? If you have to raise it today, what difference will be there in terms of your approach as compared to what you have done earlier? Any steps which you would like to do differently?
So I think that compared to 10 years back, our ask, our valuation, and the scale of our business plan would be much higher. Because the place that we are sitting in today in 2024, I think with the right leadership in place, the capex cycle, the infrastructure capex cycle in India, we are at a cusp of a once in a century capex, be it across steel, oil and gas, power, railways, defense, and we are all going to be beneficiaries of that. So I think our plan today would have been at least 5 or 10 times grander than what it was at the time. But of course, we recently had a fundraise also in this regard only, because basically we are expecting exponential business, because over the last 27 years, we built up good credentials and good technical and financial credentials over the past 7 years. Now we want to cater this exponentially. So like sir said, that this is going to be like a perennial equity race actually. It is like how money flow always keeps increasing. Number of shares will keep on increasing all over, as long as you're performing and you have business ahead. So the investors trusted us once 10 years back.
So it is just the size and the scale that will be different actually. Absolutely. But whether it is in terms of the process, the decision making, etc., I think largely you will go with.
I think we were guided pretty well with our merchant banker. I think it would be largely same and compliant with all the latest regulations. The regulations keep getting updated. Like sir said, there are disclosures. So we've seen in the last 10 years, the amount of disclosures have also increased by SEBI, which is also good for the investing public. Like for example, whenever any big order or any big dispatch is happening, we update to the media members. So it's a good way so that the larger public investor is able to know.
Communication improvement has to be there. Absolutely. So what will be your advice to all the upcoming? There are so many entities which are looking at various ways in which to raise capital. So what will be your advice to these SME companies?
So I think, as we mentioned that when there is a capital need for the business and the SMEs have the vision to grow, At the same time, take, see, it's a responsibility to going public and take public money is a very much responsible step. So, whatever regulations that we were just discussing is to ensure that there is a framework under which the fundraising happens, where there is a SMEs have an access to capital, investor have an access to a well run, well complied company for their safety. So, I think, and the equity culture, I think, which we all have been talking about, in terms of retail participation, and which is driving, and even FIS sellings we are able to absorb. So, I think India is at a very interesting space right now, where there is this risk capital is available, and I think in India the biggest venture capital is a retail investor. So they are actually betting on the companies, which, see, most of the PE funds will bet on the companies when they have grown. It is our own people who are backing our own companies, and so in every SME, like you mentioned, B2B, so there will be a lot of circle around these companies where there would be known, and this will be the feedback for the normal investors about that's how the SME market has actually grown from 2012-13, that the people who are aware about the company, they gave a good feedback and the people invested, and that's how the market has grown, the companies have grown, investors have made money. So, for people who are aspiring, they need to figure out whether I am having a fitment, as we mentioned in the beginning, and then go for a right choice of advisor, and then plan the IPO. And this is, I think, one of the most I will again repeat myself, is one of the best times. If you have a business plan, you have a management drive, and you have market size, you should just opportunity to explore, because US, they say either go big or go home. So, I think we may be moving towards that thing in about 10, 12 years, 10, 15 years time. So, those who have vision to grow, they should just capitalize.
So, Amal, this question I have to ask you, in your long stint of various capital raises that you have done, any specific instance, etc., which you are able to recall, wherein you feel you have been able to add lot of value to those various customers, any specific instances?
Yes, Sandeep. So, I think definitely there is one such incident. I think I will like to share that. Probably a lot of people would probably resonate with this story. So, the story is that early about 2015-16, when the SME was in the nascent stage, and we were going around the nation, and holding seminars and telling about what is SME IPO, what we can do about. So, one of the such seminars, one of the, I met a company promoter. He was from Jalgaon. In the
Session you were having in Jalgaon.
We were having in Nasik, not even in Jalgaon.
Okay.
So this is so the the company was there, because this was a topic which was, so basically again that growth oriented mindset. But so there was this new product available for capital. What is it about? So there was inquisitiveness. We met that he just heard about what we are talking about, and he then took our card, and then he went back, processed it, connected with us. Then he invited us to his place, and look around that this is what I am doing. What can we do for in terms of SME IPO? So when we looked around it, so it was again a classic case of first generation entrepreneur, no business background, nothing, an engineering pass out, did a business, then did some initial days of job, started with a small unit, and with this limited capital, but the entrepreneur's zeal was that he had created multiple units for a similar different businesses. So there was a proprietorship, there was a partnership, there was a private limited company, all, and so that expansion was happening, but that he was not able to understand how do I take it forward. So that's where he connected with us and asked our advice, and we could see the potential. It was now we are having an EMS as a very specific tagline in the market, electronic manufacturing. He was basically into that when this segment was not so much identified. He was into B2B space, which was also not so much valued at that point of time. So we helped him consolidate. We told him that you are doing a good business, but these pockets will not help you garner money nor valuation. So you have to consolidate that. There would be cost, there would be time, but it will be worth it. And we spent around about a year or so to consolidate all the units, including all the compliances of stamp duty, everything. Then we filed the, prepared a DRHP with a lot of disclosures. We even had a very unique case where we presented the company's financials as if it was a consolidated entity, while it was not. So the investors could understand this size is not suddenly has come. There was a size, but it was into different pockets. It was launched in 2018. The company has from there grown in leaps and bounds, both in turnover, profitability, market cap. They also had a QIP round after that, a pref round, and it is one of the well respected company with, I think, the market cap at the time of listing was about 100 crores. Today the market cap is about 2,500 crores.
Oh, that's a really very fantastic achievement.
Yes. So things are possible. So people who are aspiring, who want to go ahead, just reach out to somebody whom you feel there are advisors. I think the bankers can be the first level of call where there is already a comfort, conduct of the account is known. So I think reach out to your banker and take suggestions whether equity is good for me, and if he can suggest any good advisors. I think SMEs, it's time for you.
I think yes, any location, any industry.
Yes, location, I think across India, there are companies, across sectors, there are companies, manufacturing, service sector, IT companies, biotech, new technology, drone. I mean, and you name anything, wherever there is a business and money to be made, investors are ready. You have to present your case.
And if I may add here, so during our AGM, many of the investors come. So we've got investors all the way coming from Nairobi also who have come.
Oh.
So there are NRIs across the world who are looking to invest into Indian companies. So like Mr. Amol said, okay, this is the time for SMEs.
Yeah, I mean, from the investor side, I think one of the changes which has happened is now a lot of AIFs, family offices, the fund managers who have seen small cap, mid cap growth, they are themselves, having a large pool of funds and they are interested. They understand the business, they understand the, psyche of a small entrepreneur, and they are able to guide them, nurture them, and take them to greater heights. So I think it's an opportunity, both the investors and the, SMEs to capitalize.
So this brings us to the end of this session. I would like to thank Harsh and Amol for their deep practical insights, providing us with two most important perspectives in the IPO process, a merchant banker and a promoter. I hope you found this discussion informative. To all the budding entrepreneurs and business owners in India, I hope you were inspired, and remember, with a strong banking partner like IndusInd Bank, you too can achieve your dreams and level up your business. Thank you and stay tuned for the next episode of IndusInd Bank's Level Up.